All right, good afternoon, everybody. Should be live in YouTube and live in the VTF. I'm going to jump right into this disclosure so we can take a look at what's going on with the market. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is our position disclosure, or my position disclosure. I'm no longer in S. That had been on there. I got out of that into yesterday's move when Pat was doing the meeting. All right, let's jump in. I was all bared up today, huh? Unlike me. All right, I took a quick look at the earnings reports for Google and Microsoft as they came out. I want to take a little bit of a closer look as a family with you guys. Try to digest this. From the surface of it, just looking real quick, it looked like the numbers are fine. But after such a big move and these names being maybe a little bit expensive, fine might not be fine enough. All right, so starting with Microsoft. Microsoft's second quarter revenue beats 62 billion versus 61.14. Microsoft second quarter more personal computing rev. I'm not really sure what more personal computing rev is. Beats by 0.09 billion. Microsoft second quarter intelligent cloud rev. This is always an important one. Beats 25.88 billion versus 25.29 billion. And Amazon's trading down with Microsoft, right? Yeah, Amazon's down 3%, but that doesn't look like a bad cloud number to me personally. And the Microsoft second quarter cloud rev, that was intelligent cloud rev also beats 33.7 versus estimates of 32.2. So oftentimes we see cloud related stuff be the most important thing for Microsoft, and those numbers, well, they're beats. They're not, they didn't completely blow it out of the water, but pretty much everything I'm looking at here is a beat. Microsoft second quarter productivity rev 19.25 billion versus estimates of 19.03 billion. Beats. I don't think there's a single thing in here that I missed for Microsoft. So again, it just goes back to one of the things we talk about a lot. When stocks have really big runs, this has just been a consistent theme over the course of my trading career, where stocks have really big runs. Sometimes good is not good enough. And the opposite's true on the downside. When stocks are super beaten up and the numbers are fine, a lot of times that can create a really nice squeeze rally. I'm seeing the Qs are bouncing back decently right now as I'm even chatting. So what is Microsoft doing? Oh, Microsoft's all the way up now. What am I talking about? I'm so busy reading the numbers that and trading the TQQQ, which the Q's just dipped all the way back down here again. That I didn't notice that Microsoft rallied all the way back up. Popping back over to Microsoft. Yeah, Microsoft green now. So we closed at like 408.60 in Microsoft. Traded all the way down to 402. Now we just pop up to 414. So that's Microsoft. Numbers look good. We don't have guidance yet. I assume that they'll guide on their call. Alphabet. Fourth quarter YouTube ad revs. Small beat. That's an important one. I think YouTube's it's probably the most valuable streaming business out there. 9.2 billion versus 9.16 billion. So small beat. Google ad rev is a small miss. Small miss. But when you're priced for perfection, you can't be missing, I guess. So I still think that actually Google is the cheapest one of these Mag 7 stocks coming into the report. But still, Google misses on ad rev at 65.52 billion versus estimates of 65.8 billion. So they missed by $0.3 billion. Not the end of the world when everything else I'm looking at here is a beat. Google Cloud rev beats 9.19 billion versus estimates of 8.95. EPS beats $1.64 versus $1.59. Google Services rev beats 76.31 billion versus estimates of 75.97 billion. Rev X TAC. I actually don't know what that means. 72.32 billion, another beat. So Microsoft beats every number, yet still manages to drop at one point by $5. Now is trading pretty much flat, unchanged. Google beats on every number except for a small miss on an important number, which is their ad rev number. And off of that, you got the thing giving you almost the whole measured moves to the downside. I had a bid just below the lows of that initial move in front of 143 that did not get filled. So I missed this bounce. So we'll see how Google settles out. So the most aggressively, I didn't trade Google because I didn't get filled. I didn't even attempt to trade Microsoft. I traded the TQQQ very aggressively since the numbers hit with pretty good success. Cool. What else do we have? We got Starbucks out. I don't really care too much about Starbucks, but Starbucks is a move higher here. Starbucks misses on adjusted EPS, misses on comparable sales. That's all I'm seeing. Yet they're up. So there's got to be something else in there. Oh, we got AMD out. Oh, that's probably what created that initial uptick that I saw in the Qs there. So I'm scrolling through the VTF. Yeah, Microsoft should got in the call. Dimitri letting me know that Microsoft CEO, the next major wave of computing is being born as Microsoft Cloud turns the world's most advanced AI models into a new computing platform. Ooh, I like how that sounds. Microsoft Cloud revenue was $27.1 billion, up 22%. The percentage increases are still mind-blowing at this scale that these mega cap tech stocks are able to do. All right, we got AMD. AMD is out and is trading down by about $5 after what looks like a quick initial downtick. AMD Q4 R&D expenses come in light, not necessarily a bad thing. AMD Q4 rev beats 6.2 billion versus estimate 6.13 billion. It's a small beat on rev. Adjusted operating income, small miss, 1.41 billion versus 1.43 billion. AMD Q4 capex beats 139 million versus 120.8 million. Not necessarily a good thing. AMD Q4 adjusted operating margin, that's always an important one, is a small miss on operating margin, 23% versus estimates of 23.2%. We're really pulling hairs here, but there's another one. These numbers don't look bad. Beat on rev, but stock is priced for perfection. It's been a big move in AMD into this. Oh, we got guidance here. AMD sees first quarter revenue 5.1 to 5.7 billion. Oh, that's light. That's no good. AMD guidance on revenue is a miss. AMD sees first quarter adjusted gross margin about 52% versus estimates of 51.8%, so a small beat. Okay. So reading through those numbers, Advanced Micro Devices demand for high-performance data center products portfolio continues to accelerate. That's definitely important. Yeah. So I think that the AMD Q1 rev guidance miss matters when you're looking at a stock that's priced for perfection. As I say that, AMD just ticks back to positive here above its starting point. So AMD initial downtick is now up from where it closed today by a small amount. So again, going through these three earnings reports with you guys here, my initial takeaway is that nothing is stellar and nothing is terrible, and it's more going to be a matter of how these stocks are going to be able to react to them after such a big move. To me, honestly, Microsoft in some ways seems like the best one. Microsoft's move has just been so huge into it. So Microsoft down, up, and now kind of flattish here. Google was probably the worst of the three. so far. And again, we still haven't seen guidance, I think, from Google or Microsoft. But Google, I also think, is probably the cheapest in the report, so we'll see how that one holds up. And now AMD is trading higher. I agree that headline that Bill just said about demand for high-performance data center product portfolio continues to accelerate is huge. The gross margin guidance beat is important, but it's a very small beat. And for the moment, AMD is ignoring that rev miss. But the Qs here are still trading down pretty decently after hours. And is the IWM still up? Yeah, the IWM's up a little bit from where we closed. All right. Let's jump into more of the meat of our meeting here. SPYs are down, including any after hours action, by 0.25%. So we probably I think we closed like pretty much exactly flat in the SPYs, and now we're trading down a little bit after hours. The Qs here are down almost $1 after hours, and that brings the total day, including the after hours move, to negative 0.9%. So the Qs are down today, but that's accelerated since the market closed. And the IWM, down 0.7%, has actually experienced a small uptick since it closed. And the TLT today up 1%, also with a small uptick after the close. So that's important. And the dollar, down very, very small today. Okay, let's take a look at our technicals. Very, very tight day for the SPYs. It was interesting because the Qs and the IWM were so weak today, and the SPYs barely budged. We discussed a couple important things. One, paying attention to the 3 p.m. low from yesterday, right? That's when the market exploded off of the Treasury announcement. So as long as we're holding above that, your small time frame better off being long than short. If you lose that, it's a concern because anybody that bought the market above those prices becomes out of the money. So SPYs never even got close to 3 p.m. low yesterday. And that's despite the JOLTS number hitting at 10 a.m., which came in hot, meaning that there were more job openings than was expected, which is not what the Fed wants to see. So that helped at that time for the TLT to give a really big downtick, which it eventually fully reversed. The SPYs gave a downtick, which it eventually fully reversed. And the Qs and the IWM gave a downtick that it never was able to reverse. The IWM basically flirted back and forth after selling off at 10 a.m. with the 3 p.m. number all day today. And the Qs also sold off at 10, tried to hold that 3 p.m. number, lost it in a spectacular fashion midday here, and was never able to recover. So the small time frame here, just analyzing where the market is trading versus the release of some of these key economic events, is giving us very mixed signals. SPY, strong, up. Obviously, financials were massively strong today. Energy was massively strong today. That helped the SPYs to be able to hold in. Qs, really, really not great. Growth was like pretty atrocious today. ARC finished down almost 3%. Plenty of growth names that you could type up that are down anywhere from 6 to 2% today. So that was pretty bloody. And the IWM, I mean, that if anything, that's the surprise to me today, is that the IWM was as weak as it was, that it didn't give better follow through, that it closed below the key 198.50 level that we had discussed. And I'm a little bit surprised that growth tech was actually as weak as it is, given the TLT move. It seems like, there was for a lot of January, it seemed like the TLT and the IWM were almost kind of moving in sync. So interest rates continue to move higher, was leading to kind of greater and greater weakness in the IWM, and the Qs were able to largely ignore it. But I think that the last two trading sessions here, the TLT is up, meaning interest rates are down, and the IWM hasn't performed as well as I honestly would expect it would. Obviously, yesterday was still a really strong day, and we closed above 198.50, which is a really key level. But I kind of thought that if the TLT was able to get above that 94.50 level that I was talking about, that the IWM would really explode. Honestly, even more than it did yesterday. And whatever, yesterday was a decent day for it, but to see the IWM down as much as it was today with the TLT giving even further continuation, that's probably my biggest surprise of the day. You could point to a lot of things, though. You know, the TLT's giving this move fine, but there's just so much going on from a macro and micro perspective this week that maybe the market just wants to wait until we get through the Fed tomorrow as an example, which is a pretty big deal. Not to mention all these earnings reports. But given how did KRE do? Was KRE strong? Yeah, see, that's interesting. Big banks absolutely crushed it today, but the KRE did not participate. And the IWM moves a lot with the financials, but it really moves more with KRE than it does with JP Morgan and Goldman Sachs. So KRE was not able to participate in a massive rally day for XLF. Massive rally day. I mean, JP Morgan, just huge. I'm annoyed at myself that I'm not in JP Morgan. How many times have I said over the course of since the earnings report, oh, JP Morgan's my favorite bank. JP Morgan's my favorite bank. This chart looks really good. If it can, I was originally saying if it can get back above 169, and here I am sitting on my hands, not involved in it. But is what it is. You can't catch them all. So yeah, banks are absolutely stellar. IWM is kind of my surprise of the day. But like I was saying with Pat, I'm surprised that the IWM wasn't stronger. But you look at this inside day, this is not the end of the world. Pat said maybe we have a little doji burrito going on. I'm having tacos for dinner tonight, so we got a little doji burrito potentially in the IWM if it breaks up, similar to like a 1-2-3 play with the inside day and then continuation after the positive Maribozu. So we'll see if the IWM can play some catch up tomorrow. It's strong after hours. So again, not the end of the world to see an inside day for the IWM. SPY, as we already discussed, and look at the small time frame, they were just very, very tight, but held in very, very well. And the Qs were weak all day, and they're getting hit even further after the close here on some of these earnings reports. And I want to take a look at that again and see where these stocks are. AMD still trading around the flat line mark. Microsoft is still also trading somewhat around the flat line mark. It's down ticking a little bit red. And where are we with Alphabet? Still nicely red. So Q's being negatively impacted thus far. Excuse me. Sorry. Overall, the Qs still look fine though. You don't really want to see yesterday's candle, which was potentially setting up a new pivot low, fully get negated. But it really wouldn't be the end of the world. You got the 21 days all the way at like $415. A retest of the 21 EMA because mega cap tech struggles to continue on decent numbers is not going to be the end of the world, I don't think. So we'll see how that comes together. As far as individual stocks today, I was a bear today, which I was making jokes about. I've been heavy short this TQQQ, continued to be heavy short TQQQ all day, held a lot of it into these earnings reports, covered some of that into the down move here after hours, but I shorted Netflix today. That was one of my calls of the day. I'm actually surprised Netflix wasn't down more, to be totally honest. And I specifically said in the morning meeting, I'm not trading it super huge. I'm not looking to be super greedy on it. But you had Reed Hastings come out and sell, I think, over $1 billion worth of stock after this thing just gave 4 big positive days in a row. Yesterday's an inside day, lots of extension there. I thought that if anything, I was going to look back on my Netflix trade after the close and say, hey, you were overly conservative on it. You should have been heavier. You should have went for a bigger target for it. I was really just looking for a move into the mid 550s. And realistically, I think a move into the low 540s on just a technical pullback, especially after Reed Hastings is selling stock, is reasonable. And don't get me wrong, I know that was a good earnings report for Netflix, and it potentially sets up the buying opportunity. But I thought we might see a deeper pullback in Netflix than we actually saw, with that said, it was a good trade today for me. It was my second best name of the day P&L wise after the TQQQ. Shorted some pre-market and then called out the pivot into the ADMA here for kind of an add-on short or an opportunity to get heavier or an opportunity to get in for the people who weren't already previously in. And it worked decently. I actually feel like it should have been weaker on the day today, given that the Qs were weak and Netflix is this extended with negative news. But it held in okay. I just decided to liquidate my position into the close. The TQQQ short is heavy enough. I didn't feel like I needed extra exposure there. And then I also was focused on shorting this Vera today. And this is another one that I thought I was going to get more downside follow through. I thought I was going to get a relatively easy move, honestly, to like $31, $32 in this thing. And it held in pretty well also. Idea behind the trade, day 4 to the upside, ton of extension, and then announced a secondary offering of, I think, 9 million shares at $31. It's pretty rare that when a stock announces a secondary that it trades at a significant premium to that secondary offering throughout the day's trading session. And this thing was able to do that. There was a really strong underlying bid in this Vera all day. Gave this opening pop, then sold off. Things were looking pretty good here. And then midday here, I could just see there was just a very strong buyer holding this thing in. The market would downtick, this thing would try to downtick, and then there was a buyer just holding in all day. So I don't know the story on this thing too closely, to be honest. For me, it was as simple as, hey, a secondary offering in a stock that's on a day 4. I said in the morning meeting today that you could look for the RDR, but I also said in the morning meeting that I didn't think that it would be strong enough to be able to get above yesterday's high to even set up the RDR. So I started shorting pretty early. I was shorting pre-market at a decent price, and I was able to add a little bit on the way up, and I was able to take advantage of the RDR when it actually occurred. But I was surprised at the strength in this thing off the open, and I was surprised in the strength of this thing throughout the day and how I was able to bounce back off the 1030 low. So I ended up kind of trailing my position and getting pushed out into this afternoon uptick, and all's well that ends well, but it certainly didn't give me the reward that I was looking for. So I was out in full force as far as being a bear goes. I had long ideas this morning too, but I didn't focus on them. We mentioned Goldman Sachs. The interesting thing about the Goldman trade, and I did mention that Goldman's a difficult stock to trade, and I stand by that, is Goldman was one of the banks that got upgraded this morning. This thing didn't trade nearly as well as some of the banks that didn't get upgraded. And there was 3 that got upgraded. I actually don't remember which ones it was. I know Goldman was one of them. I don't think JP Morgan got upgraded, but it was Citi and Bank of America. Thanks, Rock. Citi, Bank of America, and Goldman all got upgraded. JP Morgan did not, but JP Morgan traded so much better than Goldman did. Beautiful breakout here in JP Morgan. Worked its way up all day. Look at this 5-minute trend. It's pretty rare that you see almost an absolute perfect 5-minute up or down trend that lasts for an entire trading session. That's what you had in JP Morgan today. Goldman, on the other hand, super sloppy. Gives you the 385 breakout right at the open with seeming momentum on really good volume. Okay, fine. It breaks the opening low, but there's still extension to the ADMA, not the end of the world. Attempts to give the pivot, but then it gives a break of the 945 low. I didn't trade it, but I can tell you with certainty if I did, I might not have been out on the break of the opening low. I definitely would have been out at 10 a.m. when this thing broke new lows again. So eventually recovered, but Goldman Sachs today is up 1.6%. But considering it got upgraded and it broke out on the daily chart, for this thing to only be $1.80 above the 385 breakout level, I think is a pretty crappy move. So yeah, that really was my main focus. We had discussed an AMD short today. That actually would have worked okay. I had discussed this MAN as a short. That would have been a disaster if anybody took it. This thing traded crazy. I'm not very familiar with how the stock trades, but I remember not trading it and at a certain point just typing it up. at like 10 a.m. and it was back to red, but it was just totally insane. Corning traded really well, but it kind of gapped up a little bit too big. General Motors just gapped up too big also to really do too much with. So at the end of the day, I think that's all I got for you guys. We'll see how the market gaps tomorrow. Looking like SPYs and Qs are going to gap down. Qs are continuing to get hit to new after hours lows right now as we're chatting. But interestingly enough, the IWM is holding in great after hours. So maybe we see some more rotation tomorrow. Obviously, there's a lot more going on this week. So tomorrow morning, we've got, I think, the official Treasury announcement. I think that's pre-market. Then we've got the Fed at 2. Probably nothing's going to happen. Press conference at 2:30. You know, if there's any real move off the Fed, it's just going to be on digestion of trying to figure out when cuts are going to occur. Are they going to occur in May? Are they going to occur in July? That is likely to give us a move more than anything else as the robots and the humans try to pull out all the information they can from the report and probably more specifically the Q&A. And then obviously we'll have AMD and Google and Microsoft trading all day tomorrow. And then Thursday's a huge earnings day. I think Thursday we've got Apple, Amazon, and Meta. So I think that's the other really big one. So we're just getting our week started still. Even after a couple of these big earnings reports, there is a lot happening. So that's all I got on my end. I am happy to take a look at whatever you guys have to say, whatever questions that you may have. So scrolling up here in the VTF, I think the first thing I'm seeing is from Christian at 4:13. Hi Derrick, around 10:30 a.m. this morning, I saw the tail in the 10 a.m. 15-minute bar and the inside bar at 10:15. Assuming you're just talking about the indices. Okay, so yeah, so 10 a.m. Was a news event, right? So you had that big kind of break lower. And then you're looking at a 15-minute chart. Let's take a look at a 15-minute chart. So yeah, so 10 a.m. is your news event. That's this candle. The next candle is an inside 15. I think that's what you're talking about here. Hold on one second. I just got to fill in something. So you decided to go long on the TQQs and the break of the inside 15 and up. I'm totally fine with that. I used half side because the setup didn't look great to me. Should I have passed this all together, or did it make sense to do it with smaller size? So I like the trade. The JOLTS number was bearish for the market, obviously, because the numbers came in higher than expected as far as openings go. But one of the ways in which this type of news candle can get negated is through an inside and up. So the inside 15 comes in, that's what you're looking at. It breaks to the upside. There's a good probability that this break to the upside is a technical catalyst that leads to a break of the high of the 10 a.m. bar. If you get above the high of the 10 a.m. bar, then you've just negated that news event. If you negate the news event, you could very well be looking at a big move on the other side. So I totally like your thought process, Christian. I like your trade. You decided you didn't love it, so you went with half size. I think that's all just fine and dandy. So I think it's a good trade. It just happened to not work out here. From Dave S. I wasn't able to do any research on the number that came out yesterday at 3 p.m. or asked yesterday about it in the VTF. Do you think you could explain the significance of that number and why it caused such a bullish reaction? Sure. So where do I begin? Let's go back to a chart of the SPYs. So right now we know that one of the biggest things that is moving the equity market is the bond market, right? Is interest rates. And there's really two major parts to this. There's what the Fed is doing, which we spend so much time talking about, and there's what the federal government is doing, which we probably spend a little less time talking about. And the truth of the matter is, I don't really remember ever seeing Treasury budgets or Treasury auctions affecting the equity market as much as it has been recently in my entire trading career. But this is one of the beauties of trading and of the stock market is that things evolve, you know. So at certain points in certain years, things that previously you wouldn't even blink an eye at because it's not going to move the market in a big way, and then maybe something now that's moving the market in a big way. In another couple of years, you won't blink an eye at it, and you'll forget the importance and relevance of it because it won't matter at that time. The JOLTS number being even an example of that. I don't remember JOLTS job openings ever really creating significant moves for the stock market until all of a sudden within the last 6 months, we had a couple reports that moved the market huge off the JOLTS number. Or CPI in 2022 has died down a little bit now in 2023, but the movements off CPI in 2022, I've never seen anything like that in my entire career. So things come into and out of fashion over time. At the end of October was when the Treasury last released their budget numbers, basically how much in treasuries they expect to sell into the open market, and that number was lighter than expected, and it helped to create the catalyst that lowered interest rates and created this big November-December move. We here on our team know that that's just part of the story, right? If anything, I think that the bigger part of the story was all the positioning information that we were looking at the end of October. But sometimes when you're looking at positioning and sentiment information, we were able to tell there could be potentially a massive rally in November. Sometimes you still need the spark to kind of light the fire. And if there was a more fundamental spark to light the fire at the end of October, it was the last time the Treasury released their quarterly expectations of how much they are planning to sell to raise money to fund the federal government. Why is this so important? Because of supply and demand in the bond market, right? So the Treasury yields move based on obviously where the Fed sets their the Fed funds target rate, but they also move based on just pure supply and demand, and a lot of supply and demand actually comes from the federal government. It comes from the Treasury, and when you've got the Treasury just raising huge amounts of money by selling trillions and trillions of dollars worth of paper, well, that selling creates supply, right? So if demand stays equal and supply increases, prices go down for bonds, which means that interest rates go up. And it's both a supply and a demand situation, because the other thing that's been happening for a while now is that the Fed has been doing quantitative tightening. So when the Fed was doing quantitative easing, the Fed was coming in as a buyer of the Treasury when they were the sellers, right? So that demand would help create equilibrium, which helped create quantitative easing, which helped keep interest rates low. So now you've got quantitative tightening going on. You don't have the Fed on the bid anymore when the Treasury is releasing these numbers and selling that paper. So what that has created is a spike in interest rates, because again, demand staying equal, or if anything, demand being potentially even less, because you don't have the Fed buying in the same way. The flip side of that is retail people have been buying more paper because interest rates have been going up, but I don't know if retail can create the same demand as the Fed can. This is what's creating a movement in interest rates very broadly. So this had never been an important number to me, honestly, ever. Knowing what the Treasury was planning to sell, because I guess they released that ahead of time. It's a quarterly expectation of how much paper they're going to need to sell. I don't remember this ever moving the market, but it has been recently because there are liquidity concerns for the market as a whole, and obviously interest rates have been moving the market so much. So You go back to yesterday and to tomorrow, where we're going to get even more information. Yesterday was just the estimate, and tomorrow is going to be, I guess, more of the official number or whatever. But if you go back to Pat's note, not from this morning, but from yesterday morning, which I'll pull up right here. This was really important, and I highlighted it in yesterday's morning meeting. These two paragraphs right here. Harnett, who's the Bank of America analyst, blah blah blah. Stocks at a big short squeeze. Kind of talking about post-October. Notes the dynamic of bonds are the master, stocks are the servant. Just kind of talking about that a little bit today. That's why I thought the IWM should have performed better. Has been very visible in recent months. It started on October 30th. Treasury Q4 quarterly refunding announcement. Okay, quarterly refunding announcement. This means how much the Treasury is going to need to supply. It was anticipated supply of 776 billion versus consensus of 852 billion. So this is what helped spark the rally, right? So this was the catalyst for the epic Wall Street rally. They announced in October that they were only anticipating to sell supply of $776 billion, but the market was anticipating a bigger number than that, 852 billion. So that number came in light of expectations, meaning less selling of treasuries. So less selling of treasuries than expected means that bonds can move higher and yields can move down, right? Again, it goes back to simple supply and demand. So that small miss, it's not a huge miss, I don't think, 75 billion in the scheme of things. And again, it's just the other factor here, which I can talk about, is this is anticipated supply. It's not a guarantee. But even just that anticipated supply coming in light was enough to move yields from 5 to 4% and create this huge rally in the S&P. Now, on Monday, the 29th, which is yesterday, we're getting the Q1 quarterly refunding announcement from the Treasury. That happened at 3 p.m. yesterday. That's what created the move. With additional details to be released Wednesday the 31st. That's tomorrow, and that's also going to be important. Consensus is for a very large 970 billion of Treasury borrowing. Okay, so that's the expected number yesterday, 970 billion. I don't remember what the number was off the top of my head. Maybe someone can remind me. I think it was a 7 number, 700 something billion. So that, again, anticipated supply number actually came in even significantly lighter on like a percentage basis than the October number, which a lot of people are saying was the real catalyst that actually set up the market rally. So it should, in theory, the fact that we came in super light on that number yesterday, rip the market higher. Yeah, so this here is saying, so the debt supply number would have to be above 1 trillion in order to dent the risk rally. So that's the real reason why we ripped. Now, there's more to it than that. You saw a lot of people coming out this morning kind of making these announcements that were saying, this is just an anticipated number. A lot of that is going to depend on April with how much revenue the government is actually bringing in from taxes, and maybe they might need to adjust this number by several $100 billion based on what they see in April. So no one should be getting too excited yet. That was kind of the general theme of a lot of things that we saw this morning, but I personally thought that yesterday's number was enough to actually create the rally. Now, tomorrow morning's number is going to be important also, and I need to learn a little bit more, to be totally honest, and I will be. But I think tomorrow we're going to get a better understanding of where within the yield curve most of that Treasury selling is going to come from, and that will also have a potential impact on the TLT, on interest rates, on the equity market. So I think that's 8:30 a.m. tomorrow. I'm not 100% sure, so someone needs to fact check me. But Dave, I really appreciate that you asked a question that you didn't fully know everything about, because I'm sure you're not the only person here in the VTF who is seeing a lot of information come across their screen that maybe they don't have a full understanding of. I know even for myself, I see a lot of information come across our screen in the VTF here that I don't have a full grasp of, and this is the only way that we can learn. So no one should ever be afraid to ask questions. So thanks for that, Dave. Scrolling through here on the VTF. Maybe the IWM catches a bit of strength considering all the unwinding of tech earnings from Cody. Maybe. I'm really not sure. So far we're seeing an uptick in the IWM. We'll pay attention to it. Bill posting some news here. Elon Musk's $55 billion Tesla pay package is voided by a judge. Ouch. From Dave S. with a follow-up. So correct me if this is incorrect, but basically a lower amount of bonds sold means that there are less people buying bonds. Now, not necessarily, which means that money is going back into equities and therefore buy stocks and front-run that rotation. Sort of. So if a lower amount of bonds get sold, if there's less supply, it doesn't necessarily have an effect on demand inherently. Obviously, the movement of interest rates will have an effect on demand, but less supply of bonds does not necessarily mean that less people are buying. If anything, I think that a broadly better assumption, even though this is not a one-for-one thing, is that you would actually have the same amount of demand, but you would have less supply, which therefore means that bonds would move higher. And exactly. Bonds can move higher if demand stays the same, but now there's less supply, which means that interest rates can go down, which means that it's potentially positive for interest rate sensitive equities and can add back to the multiple, especially for IWM stocks. So cool. Hope that helps, Dave. Microsoft OpenAI in talks to lead Figure AI funding round. Figure AI is said to be seeking to raise as much as $500 million. I don't know what Figure AI is. 8:30 a.m. tomorrow. Looking for a breakdown between bills and bonds. More bills means more liquidity, so less concern. Thanks, Bill. Yeah, so tomorrow, like I was saying, we are going to get an update on where the Fed is actually raising funds from, what end of the curve, bills versus bonds. So more bills means more liquidity, so less concern. Cool. Looks like I got through everything in the VTF, so let's pop over to YouTube and see what's going on in YouTube. From Robert, AMD, Microsoft, Google names, which are reporting tonight, start selling after 12 p.m. Did not see any news. I think it was just technical. Would you say it was caused by the daily chart run into earnings as profit taking before the report? Broadly, yeah. So basically, what Robert in YouTube is asking is he's asking about this sell-off that occurred in the Nasdaq and a lot of these stocks that were going to be reporting earnings at noon. I think it was just technical in nature. I think we were already weak in the Qs post 10 a.m. These names have had huge runs. Some additional profit taking, like you're saying, makes sense. So it didn't seem like a news event. I know people in the VTF at 12:15 were saying, hey, what's the news in AMD? I don't think that there was any news. I think it was just technical in nature, maybe some profit taking into the report. So, yeah, Robert, seems pretty spot on. And Apex Joy is asking me what I think about Southwest Airlines, LUV. They gapped this thing up on, if I remember correctly, a pretty good earnings report, and then sold it all the way back down. So I don't follow Southwest super closely, but I remember that it was a decent report, but they sold it off. That's always significant. Similar to if they sell off AMD, Microsoft, and Google here after hours on decent numbers. It's always significant. I've always found over the course of my trading career that when stocks sell off on good news, it's like a big picture warning sign. And the opposite is true also. When stocks start getting bought up on bad news or don't go down on bad news, that is a sign that you should really start buying. So Southwest here, it put in a little bit of a doji yesterday. You could try to be long off of yesterday's low if you're eyeing into the long side for whatever reason. But I do not like that they sold off what I think was a good earnings report all the way back down. I think that if you are trying to buy versus yesterday's low, that your reward is capped because of this selling from the earnings report, which for me means it's not something that I want to be involved in. And you're also asking me about ET, Energy Transfer. Not a name I trade a lot either. Had a big run here. It's extended. Is it bullish? That's your direct question. Yeah, it's bullish, but it's extended. So while it is a bullish strong chart, it's probably due for either some sideways action or a pullback. Depending on your sizing, it might not be a terrible idea to book a little bit of profit. Thanks for the question, Joy in YouTube. All right, gang, it looks like I got through everything in the VTF and everything in YouTube. I appreciate the engaging discussion. I appreciate the questions like always. There's a lot of moving parts going on right now with this market. That's why, I haven't been fully trusting of this market. I've been much more hedged than I usually am, and at a lot of points today, I was actually net short for a lot of the day today. Appreciate you guys as well. Appreciate everybody who's on the team and who participates and provides great information. Have a fantastic night. I'll see you all tomorrow.